Welcome back to TalkTickers. You know what we do here, right? We take those long, sometimes snooze-worthy earnings calls and break them down into what really matters for investors.
Actionable insights, right?
Exactly. Actionable insights. And today, we're diving deep, no pun intended, into JD.com's fourth quarter and full year 2024 results.
So right off the bat, you can tell JD.com finished the year strong. I mean, their operational and financial performance in Q4, it was really solid. Revenue growth accelerated back into double digits year over year.
Yeah, and it wasn't just a one-hit wonder in Q4. Their full year results were nothing to sneeze at either.
Oh, for sure. They showed a really solid growth for the whole year. In fact, they actually outpaced the overall retail and online market growth, the numbers we've been seeing reported lately.
Yeah, that's a great point.
And importantly, their profitability, it expanded nicely for both the quarter and the full year. Plus, they've been actively returning value to shareholders through buybacks, and they even increased their annual dividends substantially.
Okay, so let's rewind a bit. Let's break this down, starting with that revenue growth, because that really sets the stage, doesn't it?
It does.
Net revenue jumped 13% year over year in the fourth quarter. We're talking RMB 347 billion, and for the full year. Full year revenue hit RMB 1.2 trillion. That's a 7% increase. And looking at the specifics, product revenues followed a similar trend, up 14% in Q4 and 7% for the full year.
And you know what's interesting to me here? It's the momentum we see within specific product categories like electronics and home appliances. They had a huge upswing, growing by a remarkable 16% year over year in Q4 and 5% for the full year.
Wow, that's significant.
Yeah, and remember, it's not just about the volume here. Electronics are often a higher margin category. So this kind of growth, it tells me JD.com is either capturing more market share in this really profitable segment, or consumer spending is shifting back towards these items.
Or both.
Right.
So possibly both.
And, JD.com themselves, they credited their strong supply chain, their service capabilities, and also user loyalty for these results. They also mentioned getting a boost from those government stimulus policies, and they seem optimistic that this positive trend will continue into 2025.
That makes sense. Now, general merchandise, that also demonstrated continued strength. Revenue growth accelerated to 11% year over year in Q4. And for the full year, it came in at a healthy 9%. Now, within this broader category, the supermarket business, that's where things get really interesting. They delivered double-digit year-over-year revenue growth for the fourth consecutive quarter. What's fueling that consistent performance?
Well, I think this sustained double-digit growth in the supermarket segment, it really points to some successful strategic execution by JD.com. They were very clear about highlighting the improvements they've made in their supply chain. And that encompasses a lot, right? It's everything from the actual mix of products they offer to how efficiently they're sourcing those products to how effectively they're running promotions. And the fact that they see so much long-term potential here, not just in traditional online grocery, but also in this burgeoning on-demand retail space, quick commerce. It tells me they're playing the long game. They're aiming to build a really sticky, loyal customer base for those everyday needs.
Yeah, it's about that repeat business.
Exactly. That kind of repeat business is golden.
It is golden for sure. And then there's the fashion category. They seem to be turning a corner there as well. They mentioned gaining momentum thanks to operational improvements and also increased consumer mindshare, which is leading to, people shopping more frequently in that category, and crucially, more merchants wanting to get on their platform. They plan to continue investing here, recognizing its strategic value for getting users more engaged, more locked into their ecosystem, and strengthening that whole marketplace as a whole.
See, this emphasis on fashion, to me, it highlights an important aspect of JD.com's strategy. They're trying to diversify beyond their traditional strongholds, those core areas like electronics. And this growth in service revenues we're seeing, that also underscores this. They saw an acceleration to 11% year-over-year growth in Q4 and 8% for the full year. Now, marketplace and marketing revenues were a big part of this story, jumping by 13% year-over-year in Q4. So what's this acceleration in their marketplace telling us?
Well, to me, it's that double-digit growth in both the commissions they're earning and the advertising revenue they're pulling in. It really signals that their third-party platform, it's becoming a lot more attractive, and it's generating some serious traction. They're not just about selling their own products anymore. They're building a whole vibrant ecosystem for other merchants.
Right.
And their logistics and other services, those also contributed nicely, growing by 10% in Q4 and 9% for the full year.
Now let's step back from the pure financials for a minute because, the health of any consumer-facing business, it really hinges on its user base. And JD.com reported its fifth consecutive quarter of double-digit year-over-year growth in quarterly active customers. And the pace of that growth actually picked up in Q4. So what does that tell you?
Well, that's impressive, consistent growth.
And it's not just about getting new users, it's about keeping them engaged. And their user shopping frequency, that also showed double-digit year-over-year growth for 4 straight quarters. So that's a strong indicator, in my opinion, of increasing customer loyalty and engagement.
And here's where it gets really interesting when you start to dig into the specifics of that user growth.
Oh, yeah.
Growth in those lower tier markets, it actually outpaced the growth they saw in those higher tier cities.
Interesting.
Which suggests, maybe they're successfully reaching new customer segments. And get this, their JD Plus members, those are their loyalty program subscribers, they showed even faster growth in shopping frequency. And they even rolled out some enhanced benefits for Plus members in January of this year. So they're clearly focused on retaining and rewarding those most loyal customers.
Now, that focus on user engagement you just mentioned, it ties in directly with another key area they emphasized, price competitiveness. They made some significant strides in 2024 in being more price competitive, especially on those branded products. And they also expanded their selection of those more affordable value for money items. Now, I think this strategy probably played a significant role in that strong user growth they're seeing in those lower tier markets.
Yeah, it all seems connected, doesn't it?
It's all interconnected. And another thing worth noting here, both the volume of orders placed on their third-party platform, that marketplace we talked about, and the number of users who are actually buying from those third-party sellers, those also saw really robust year-over-year increases with an acceleration in Q4.
So they're really firing on all cylinders here.
They seem to be. And even the Net Promoter Score, NPS, that measure of customer satisfaction, the NPS for their third-party offerings, even that improved, which speaks to better customer satisfaction, right?
Yeah, absolutely. So it seems like all of this activity they've been undertaking is having a real impact on their profitability.
Yeah, let's talk about that.
Their non-GAAP net profit attributable to ordinary shareholders, which, that's a measure that strips out some of those one-time or non-cash items. To give you a clearer picture of their ongoing business performance, it jumped by a significant 34% in Q4 and 36% for the full year.
That's substantial.
Yeah, their non-GAAP net margin, it reached 3.3% for the quarter and 4.1% for the full year. And it's not just the bottom line. Their gross margin also expanded, reaching 15.3% in Q4 and 15.9% for the full year. This was driven both by their retail operations and their logistics arm. And they're on quite a streak here. JD Retail's gross margin, get this, it's now expanded for 11 consecutive quarters.
Wow, that kind of consistent margin expansion, it really demonstrates their ability to manage costs effectively and potentially command better pricing. And let's not overlook their commitment to returning capital to shareholders. They approved that annual cash dividend for 2024 of 50 cents per ordinary share, which translates to $1 per ADS. That's a substantial 32% year-on-year increase per share. The total payout is expected to be around $1.5 billion. And on top of that, they were actively buying back their own shares in 2024. So what does that signal? To me, it signals that management believes that the company's stock might be undervalued, and they're further rewarding investors by reducing that outstanding share count.
It's interesting looking ahead. It's clear that technology is a major focus for JD.com. They're actively integrating artificial intelligence and industrial robotics across their operations to further drive automation. We're talking about AI being used in everything from their marketing and customer service to refining those search and recommendation algorithms and even streamlining those internal workflows. They even launched an AI shopping assistant. It's called SINGIN. So how significant do you think these tech investments are?
Well, I think these investments in AI and robotics, they're absolutely crucial for long-term efficiency and competitiveness, especially in this cutthroat e-commerce space. And, their deployment of proprietary industrial robots in their fulfillment centers, that's a tangible example of how they're aiming to lower those costs and improve the speed and reliability of their, frankly, extensive logistics network. Speaking of JD Logistics, they also had a pretty solid year. Revenues were up 10% year over year for both Q4 and the full year. And importantly, with double-digit growth in both the business they're doing for JD.com itself, internally and for external clients as well.
That's good diversification.
Absolutely. And that continued optimization of their logistics network and that increased automation we just talked about, that led to higher non-GAAP operating income and a pretty healthy operating margin of 3.5% for both the quarter and the year. And they're not stopping there. They're planning further investments in their logistics capacity in 2025. So this tells me they're really doubling down on this core strength.
Now, one area where they saw contraction was their new business segment. Revenues here declined by 31% in Q4 and 28% for the full year. And this was largely due to adjustments within their Jinxie business. Interestingly, this also led to a wider non-GAAP operating loss in that segment. But despite this pullback, management reiterated that lower-tier markets remain a key strategic priority for 2025. How do you square that circle?
That's a good question. I think it suggests that there's a strategic pivot or a refocusing happening within their approach to those lower-tier markets. While that Jinxie model may have faced some challenges, the underlying opportunity in reaching those consumers, it's still huge. So they're likely exploring, more sustainable and efficient ways to really penetrate those markets. And they can leverage what they learned from that Jinxie experience.
Right.
It's a good reminder that not every new initiative is going to be an instant success, but the long-term strategic direction, that remains in place.
So taking a step back and looking at the big picture, what's the overall takeaway for JD.com heading into 2025?
Well, management, they sound increasingly optimistic. They're expecting better consumption trends driven by domestic demand and, that positive impact from all those AI initiatives they've been working on. Their focus remains on what? On driving down costs, boosting efficiency, and enhancing the user experience. They plan to continue investing in general merchandise, growing that user base, and strengthening their platform ecosystem. And they've set a pretty ambitious long-term non-GAAP net margin target in the high single digits.
Ambitious indeed. So from an investor's perspective, what are the key takeaways here?
Well, I'd say that strong double-digit growth they're seeing in those key categories, coupled with those expanding profit margins, it definitely suggests a positive trajectory for JD.com. The fact that they're continuing to add users and, importantly, keep them engaged, even after they've made changes to things like their free shipping policies, that speaks to the underlying strength of their value proposition. The accelerating growth in their third-party marketplace, that's particularly encouraging to me because it diversifies their revenue streams and ultimately enhances profitability. And those shareholder returns, that significant increase through dividends and buybacks, that really demonstrates management's confidence and commitment to investors.
So a lot to be optimistic about.
Yeah, and their proactive embrace of AI across all their business functions, that's huge. That could provide a significant long-term competitive edge. And finally, while their new business segment faced some headwinds, their continued focus on those lower-tier markets indicates a commitment to long-term growth by reaching a broader consumer base.
All right, now it's time for our favorite segment. This is not financial advice. Where we put on our creative thinking caps and explore some, let's just say, unconventional possibilities.
That should be good.
So here's a thought for you. Considering JD.com's impressive and consistently growing supermarket business, coupled with their, let's face it, best-in-class logistics network, what if they started aggressively expanding into the prepared meals and restaurant delivery space? Like really going head-to-head with the established players.
Interesting.
Think about it. They've got the warehouses, they have the delivery infrastructure, and now they've got this proven track record in fresh food.
Yeah, I see where you're going.
So you could consider a long position in JD.com, betting on this potential expansion, really disrupting that food delivery market, while at the same time shorting a major pure play food delivery platform that doesn't have those integrated supply chain and warehousing capabilities that JD.com has. The thesis here is that JD.com could leverage its existing infrastructure to offer better margins and potentially even lower prices, squeezing out those less integrated competitors. I know, it's a bit of a moonshot, but their current trajectory in the grocery space, it kind of lays the groundwork, doesn't it?
It's definitely thinking outside the box. I like it. Another angle to consider, given JD.com's aggressive push into AI and automation across their operations, is to look at the potential impact on their labor costs and the potential for efficiency gains.
Okay, I'm listening.
So imagine if their advancements in robotics and AI-powered logistics lead to significantly lower operational expenses compared to, some of those competitors who are a bit potentially, and I'm using the term loosely here, outrageous but plausible trade could be to go long JD.com while simultaneously buying put options on a major international e-commerce and logistics company that hasn't shown that same level of commitment to investing and integrating AI and automation.
Okay, so you're betting on JD being ahead of the curve.
Exactly. The idea here is that JD.com's, let's call it a technological lead, could turn into a substantial competitive advantage and lead to improved profitability. While that laggard, that other company, they're going to be facing increasing cost pressures.
Right.
Now, again, this is just a speculative idea, but it highlights those potential long-term implications of JD.com's, very tech-forward strategy.
And that wraps up our deep dive into JD.com's latest earnings call. We covered a lot today, from significant revenue growth and margin expansion to their strategic investments in technology. And of course, we explored some, let's call them thought-provoking, potential investment strategies. Remember, this is just our take on the call. We always encourage you to do your own research. What aspects of JD.com's performance stood out most to you? What are your thoughts on their growth in lower-tier cities? Or, their ambitious AI plans? We want to hear from you. Join the conversation and share your insights. This is TalkTickers, giving you the tools to think critically about the market.